I'm Tom Stelzer from Live Wire Markets, and today I'm joined by Michael Price to discuss Ausbil's active dividend income fund, now available as an active ETF. Thanks for joining us, Michael.
Thanks for having me, Tom.
Do you mind just giving us a quick overview of Ausbil and your role there?
Ausbil's a fund manager, Australian-based, over 20 billion in funds under management, one of the largest team of analysts in the country. And I'm the portfolio manager for the Ausbil Active Dividend Income Fund, active ETF now. My job is to take or create a portfolio that meets the objectives of the fund from the list of stocks that our analysts have deemed investment grade under the Ausbil process.
And what would you say sets your fund apart from other funds, especially in terms of generating income?
Well, there's a few features to the income that we like. The fund's been around for over 7 years now. We've been able to distribute over 7% every year. That's after fees and including franking credits. We're able to distribute monthly, so that's a good thing for many investors. We smooth that income over time, over the year, and also we expect that income to be able to grow. So even though we're distributing 7%, we hope we can keep track with the market. If the market does, say, 10% over time and you're getting 7 income, that leaves 2 to 3% for the income to grow and the capital to grow over time. So that combination of smooth monthly, growing over time, I think is pretty attractive.
What opportunity do you think the fund's offering to investors right now?
At the moment, interest rates have been cut. The forward dividend yield on the market's basically as low as it's been, lowest it's been for over 30 years. If you have a look at where the income came from in 2024, 60% came from just 2 sectors, the banks and the resources. So the opportunity with the income fund, and in particular being an active dividend income fund, is we're able to use the full breadth of resources of the Ausbil team to maintain the dividend yield despite dividends being lower, and to get income out of the full market, the full range of stocks out there, and not just rely on 1 or 2 sectors.
And you've recently said that you're seeing some opportunities emerging from the ongoing tariff policy in the US, but where are you looking in markets right now, and what else is shaping your strategy?
Yeah, so look, there's a few themes we try to invest in. Our process starts top down, looking at the world. I've got a chief economist who gives us some ideas of attractive sectors and themes that we should be invested in. So one of them, certainly we've been quite confident that the US will be stronger than people expect despite the tariffs. And so investing in companies with exposure to US growth has been a good thing. Another thing is the interest rate cuts in Australia, we think will lead to an increase in growth in the Australian economy. So investing in companies that are exposed to growth in the Australian economy, that's something we want to do. Consumer discretionary companies pay some good dividends, companies like that. And the third thing, a couple of themes we've been talking about maybe for a couple of years now, sort of decarbonisation and electrification has been good for resources. And then we couple that with something we've really been seeing this year, and that's an increased defence spending in Europe, relaxed fiscal policy in Europe. That's also good for resources. So really the full range of resources, iron ore, copper, lithium, gas for the energy transition, even gold is quite attractive with current gold prices spitting out lots of dividends. Getting exposure to those 3 themes is what we're trying to do at the moment.
You mentioned the opportunities there around dividends, but what would you say are some of the risks maybe presenting themselves at the moment?
Yeah, look, there's always risks involved in investing in equities. I'm pretty good at controlling the income, and because we've got the full range of stocks we can choose from, the income from the fund is pretty reliable. But unfortunately, I can't control whether the market goes up or down, and so yeah, there can be some fluctuations along the way. Look, the way we manage those risks is as I said, we try and diversify as much as possible. We do have a big team. We're able to invest in a range of stocks across a range of sectors. So we try and manage the risk of market fluctuations that way. So look, I think the income can be pretty reliable, and in the long term, we do think that the market will go up. There might be some fluctuations along the way.
And so what type of role do you think this ETF can play in an investor's portfolio?
Yeah, look, so the idea is that this is for somebody who wants to spend that income and have that income that grows over time. The beauty of an ETF is it can achieve things that you just can't get with a single stock. So we are able to get that income, we're able to pay a monthly dividend, which you can't get from a stock. It should be able to grow over time and done that in a managed, risk-controlled way because of the diversification. So yeah, we do see it as really as the ideal income stock. Yeah, and look, now I think it's a good time to launch that with dividends coming down, with interest rates being cut, yeah, making a fund like this more accessible to people, I think is a very attractive opportunity.
And finally, where can investors find out more information about the ETF?
Go to our website, so ausbil.com.au/DIVI. So DIVI is the name of the ETF. So yeah, look up DIVI on the Ausbil website.
Thanks for joining us today, Michael.
Thanks for your time, Tom.
Thanks for watching. Make sure to check out our website and YouTube channel for more videos like this.